The email notification popped up on my phone while I was waiting for my coffee at the drive-thru. Congratulations on your recent loan approval. $8 million. I stared at the screen, my heart hammering against my ribs. I hadn't applied for any loan, let alone one that could buy a small mansion.
I'd love to know which corner of the globe you're watching from. And if this story speaks to you, make sure to subscribe. Tomorrow's video is one you absolutely can't miss. My name is Daisy Garcia, and 3 weeks ago, I thought my biggest problem was deciding whether to get promoted to senior marketing director at my consulting firm in Denver. I had a decent apartment in Capitol Hill, a reliable Honda Civic, and about $15,000 in savings that I'd been carefully building for the past 5 years. I wasn't rich, but I was comfortable, responsible, and most importantly, I had pristine credit. That Tuesday morning started like any other. I'd grabbed my usual vanilla latte and was heading to the office when that email arrived. At first, I assumed it was spam or some kind of phishing attempt. Banks don't just congratulate you on loans you never applied for. But the sender looked legitimate. Mountain Vista Commercial Banking, a regional institution I'd never even heard of. The email contained an official letterhead, a loan reference number, and my full legal name spelled correctly. It thanked me for choosing their institution for my commercial real estate venture and mentioned that the funds had already been transferred to the designated account. My hands were actually shaking as I pulled into the parking garage at work. I called the bank immediately. The customer service representative, a cheerful woman named Patricia, confirmed what the email had stated. According to their records, Daisy Elena Garcia had indeed been approved for an $8 million commercial loan 3 days prior. The loan was secured against a property portfolio in Phoenix, Arizona. Phoenix, a city I'd visited exactly once for a college spring break trip 6 years ago. There must be some mistake, I told Patricia. I never applied for this loan. I don't own any property in Phoenix or anywhere else. Patricia's tone shifted from cheerful to concerned. She asked me to verify my social security number, date of birth, and current address. Everything matched their records perfectly. She then asked if I had any business partners or family members who might have access to my personal information. Family members. The words hit me like ice water. My brother Marcus had been struggling financially for the past 2 years. His restaurant in Scottsdale, yes, Scottsdale, right outside Phoenix, had been hemorrhaging money since the pandemic. He'd already borrowed $20,000 from our parents, maxed out 3 credit cards, and had been making increasingly desperate phone calls to various family members asking for help. But Marcus wouldn't steal my identity. We weren't particularly close, but we weren't enemies either. He was just my older brother who'd always been a little too ambitious for his own good, someone who saw every setback as a temporary obstacle rather than a warning sign. Patricia put me on hold while she pulled up more details about the loan application. When she returned, she had information that made my stomach drop. The application had been submitted by Garcia Holdings LLC, a company I'd never heard of, and it listed me as the primary guarantor and majority stakeholder. The business address was in Phoenix, but the phone number on file was one I recognized immediately. It was Marcus's cell phone. I need copies of everything, I told Patricia. The application, the supporting documents, all of it. She explained that due to privacy regulations, she could only email me documents that specifically pertained to my involvement in the loan. Within 20 minutes, my inbox contained a PDF package that revealed the full scope of what had been done in my name. The loan application was a masterpiece of fraud. Someone had created an entire fictional business empire using my identity. Garcia Holdings LLC supposedly owned 4 restaurant properties in the Phoenix metropolitan area, with detailed financial statements showing steady revenue streams and growth projections. There were lease agreements, tax returns, and bank statements, all fabricated but professionally done. My signature appeared on dozens of pages, not forged signatures that looked like someone had practiced writing my name, but actual scanned copies of my real signature. Someone had access to documents I'd signed legitimately and had lifted my signature to paste onto these fraudulent forms. The supporting documentation included copies of my driver's license, social security card, and even my tax returns from the previous year. Personal information that only a handful of people had access to. The loan package also contained something called a personal financial statement that listed assets I definitely didn't own, including a condo in Denver worth $400,000 and investment accounts totaling nearly $500,000. I sat in my car in the office parking garage for 40 minutes, reading through page after page of my fictional business empire. Whoever had created this had done their homework. They'd researched property values in Phoenix, created realistic revenue projections for restaurant businesses, and even included architectural plans for restaurant renovations that would supposedly be funded by this loan. The most disturbing part was how thorough it all appeared. This wasn't some amateur operation throwing together fake documents at the last minute. Someone had spent considerable time and effort creating a convincing narrative about my success as a restaurant entrepreneur in Arizona. My phone rang. Marcus. Hey, Daisy, got a minute? I wanted to talk to you about something. I stared at his name on my caller ID. The timing couldn't be coincidental. Actually, Marcus, I need to talk to you about something too. Are you familiar with a company called Garcia Holdings, LLC? The silence stretched for so long I thought the call had dropped. Marcus, are you still there? Yeah, I'm here. Look, can we meet somewhere? This isn't really a phone conversation. We agreed to meet at a coffee shop in downtown Denver that evening. I spent the rest of the day at work unable to concentrate on anything. Every time I tried to focus on my actual job, my mind drifted back to those documents and the growing realization that someone I trusted had systematically stolen my identity to secure millions of dollars. When I arrived at the coffee shop, Marcus was already there, slumped in a corner booth, looking like he hadn't slept in days. He'd always been the more charismatic of the two Garcia siblings, taller, more outgoing, with an easy smile that made people want to help him. But that evening, he looked defeated, older than his 31 years. Before you say anything, he started, I want you to know that this was never supposed to involve you, not directly. I slid into the booth across from him. So you admit you know what I'm talking about? Marcus rubbed his face with both hands. The restaurant is finished, Daisy. I owe suppliers, landlords, employees. The bank is threatening foreclosure on my house. Sarah took the kids to her mother's place last week because she can't stand watching me destroy everything we built. Sarah was his wife of 8 years, and they had 2 young daughters. I'd always liked Sarah. She was practical, level-headed, everything Marcus wasn't when it came to business decisions. How much do you owe? I asked. Including the restaurant debt, the house, credit cards, everything, about $3.5 million. The number hung in the air between us. $3.5 million was more than most people earned in a lifetime. So you decided to steal $8 million using my identity? Marcus winced at the word steal, but didn't deny it. It wasn't supposed to work like this. I have a business partner, someone who specializes in commercial lending. He said we could secure a loan using existing business assets as collateral, and that we'd only need to borrow what was necessary to get back on our feet. Who's your business partner, Marcus? His name is Vincent Rothschild. He runs a consulting firm that helps struggling restaurants restructure their debt. He's legitimate, Daisy. He's helped dozens of businesses avoid bankruptcy. Vincent Rothschild. The name sounded like something from a movie, too polished to be real. Marcus continued. Vincent said the banks would be more likely to approve a larger loan if the application came from someone with perfect credit and no existing business debt. He said we'd only actually withdraw what I needed to save the restaurant, maybe $400,000 at most. The rest would just sit in an account as collateral. And you gave him my personal information? He said he just needed basic details to run a preliminary credit check to see if you'd qualify. I never gave him permission to actually apply for anything. Marcus's voice was getting smaller with each sentence. I pulled out my phone and showed him the email from Mountain Vista Commercial Banking. Well, your business partner withdrew all $8 million, Marcus. It's gone. Marcus stared at the email on my phone screen, his face going pale. That's impossible. Vincent assured me that the funds would be held in an escrow account until we could prove the restaurant was generating positive cash flow again.
When did you last speak to Vincent? I asked. Yesterday. He said everything was proceeding normally and that I should expect to hear from the bank within the next few days about setting up a repayment schedule. Marcus pulled out his own phone. I'll call him right now.
A lot of love and effort went into bringing this story to life. If you're enjoying it, we'd be so grateful if you'd subscribe to our channel. Now, back to where we left off. He dialed Vincent's number and put the phone on speaker. It went straight to voicemail, not even Vincent's voice, just the generic, automated message. Marcus tried 2 more numbers that he said were Vincent's office lines, both disconnected. "This doesn't make sense," Marcus said, more to himself than to me. "I've been to his office. I've met his staff. He showed me documentation of other successful restructures he's handled." I leaned back in the coffee shop booth, trying to process the enormity of what we were facing. "Marcus, I think your Vincent Rothschild just disappeared with $8 million of borrowed money that I'm legally responsible for repaying." The reality was starting to sink in for both of us. Marcus had been conned by a professional, and I was the one who would face the consequences. "What kind of office did he have?" I asked. Marcus described a sleek operation in Scottsdale with a receptionist, multiple phone lines, and walls covered with certificates and awards. Vincent had shown him testimonials from satisfied clients and detailed financial reports from successful restaurant turnarounds. There had even been a legitimate-looking website with case studies and professional photographs. "Did you ever verify any of those success stories? Call the restaurants he claimed to have helped?" Marcus shook his head slowly. He was so convincing, Daisy, and I was desperate. The bank was literally threatening to start foreclosure proceedings this week. I pulled out my laptop and searched for Vincent Rothschild, Restaurant Consultant Phoenix. Nothing. Vincent Rothschild, Scottsdale, Business Advisor. Still nothing. Then I tried searching for the specific address Marcus had given me for Vincent's office. The address existed, but according to the building directory, it housed a physical therapy clinic, 2 dental offices, and a tax preparation service. No Vincent Rothschild, no restaurant consulting firm. "Marcus, there's no record of Vincent Rothschild having an office at that address. Are you sure you remember it correctly?" He was sure. We spent the next 20 minutes searching every variation of Vincent's name and business we could think of. No website, no business registration, no professional licenses. Vincent Rothschild might as well have been a ghost. My phone rang. Patricia from Mountain Vista Commercial Banking. "Miss Garcia, I have some additional information about your loan that I think you need to know immediately." I put the phone on speaker so Marcus could hear. "The funds from your loan were transferred this morning to an offshore account in the Cayman Islands. The transfer was initiated by someone with authorized access to the Garcia Holdings LLC business account." "What does that mean exactly?" I asked. "It means that whoever has access to your business banking credentials moved all $8 million out of the United States. Once funds reach certain offshore jurisdictions, recovering them becomes extremely difficult." Marcus looked like he might be sick. Patricia continued. "I also ran a more detailed background check on Garcia Holdings LLC. The business was registered in Nevada just 4 weeks ago, with you listed as the sole owner and Marcus Garcia listed as Chief Operating Officer. The registration was filed electronically using what appears to be your digital signature. How is that possible? Do you remember signing any documents recently that might have contained signature authorization language, even something that seemed unrelated to business formation?" I tried to think back over the past few months. I'd signed apartment lease renewal documents, some HR paperwork at my job, and a new insurance policy. Nothing that should have granted anyone permission to start a business in my name. The person who filed the business registration also submitted articles of incorporation, listing significant assets and projected revenues. They provided tax identification numbers, business licenses, and even workers' compensation insurance documentation. This was not an amateur operation. After hanging up with Patricia, Marcus and I sat in stunned silence. We were dealing with someone who had orchestrated an elaborate con that spanned multiple states, involved forged business documents, stolen signatures, and now international money transfers. "I need to see Vincent's office," I said. "The actual physical location where you met with him."
Marcus nodded. We can drive down to Phoenix tomorrow morning. But Daisy, what if he's gone? What if the whole office was just a setup? Then we'll figure out our next move. But right now, we need to gather every piece of evidence we can find. I called my boss and took 2 personal days, then booked us a flight to Phoenix for early the next morning. Marcus gave me copies of every document Vincent had provided: business cards, letterhead, the testimonials, everything. That night, I barely slept. I kept running through different scenarios in my mind. Best case, Vincent was a legitimate consultant who had somehow been manipulated by a third party to misuse the loan funds. Worst case, Vincent was a professional con artist who had specifically targeted Marcus because of his desperation and family connection to someone with excellent credit. The flight to Phoenix was tense. Marcus spent most of it staring out the window, occasionally muttering about how stupid he'd been to trust someone he'd only known for 6 weeks. I spent the time researching everything I could find about commercial loan fraud and identity theft recovery. We landed in Phoenix just after 10 a.m. and drove straight to the address Marcus remembered. The building was exactly as he described, a modern glass structure in a busy commercial district. But when we walked inside and checked the directory, there was no Vincent Rothschild listed anywhere. The building security guard, an older man named Frank, was helpful when I explained we were looking for a business consultant who supposedly had an office in the building. "You're the second person this week asking about that," Frank said. "Someone else came by Monday looking for the same guy. A tall fellow, well-dressed, said he was Vincent Rothschild's business partner." My heart rate accelerated. "Did this person give you a name?" "Called himself Thompson, I think. James Thompson. Said there had been some kind of emergency and he needed to access Vincent's files." Frank explained that James Thompson had spent about an hour in the building, going floor by floor, asking different businesses if they'd seen Vincent Rothschild. Nobody knew who he was talking about. "But here's the weird thing," Frank continued. "Thompson had keys to Office 714. I saw him coming out of there carrying a box of files. When I asked him about it, he said Vincent had asked him to clean out the office because of a family emergency."
Office 714 was supposed to be occupied by the physical therapy clinic. Frank walked us up to check, and sure enough, the physical therapy clinic had no idea what we were talking about. They'd been in that office for 3 years and had never shared the space with anyone. Is there any way someone could have used that office without the physical therapy clinic knowing? I asked the receptionist. She thought about it. "Well, there is a back entrance that leads to a small storage area we don't use. I suppose someone could have accessed that space separately, but they'd need keys from building management." Frank was getting more interested in our mystery. He checked his security logs and found records of Vincent Rothschild signing into the building on multiple occasions over the past month, always during evening hours when most businesses were closed. He was using a guest access code that had been issued to someone named Elena Vasquez, Frank said, but I don't recognize that name either. We were chasing ghosts. Vincent Rothschild had operated some kind of phantom office space, meeting with Marcus and presumably other victims during times when the building was mostly empty. James Thompson, who may or may not have been Vincent himself, had cleaned out whatever operation existed there. Marcus was devastated. I sat in that office with him 3 different times. We went over financial projections, discussed repayment terms, and talked about my family. He knew about Sarah, about the girls. He asked about their school, their hobbies. How do you fake that kind of personal interest? "Because that's what makes him good at this," I said. "He's not just stealing money, he's stealing trust." We spent the rest of the day driving around Phoenix, checking the addresses Vincent had provided for his supposed success stories. 2 of the restaurants didn't exist. One was a completely different type of business that had never heard of Vincent. The 4th was a restaurant, but when I spoke to the owner, he looked at me like I was crazy. Vincent Rothschild? Never heard of him. And we've never needed any kind of debt restructuring. We've been profitable since day 1. By evening, the picture was complete. Vincent Rothschild was a professional con artist who had constructed an elaborate fake business to exploit desperate restaurant owners. He'd targeted Marcus specifically because of his family connections and financial desperation, using him to gain access to my pristine credit and personal information.
The $8 million was gone, transferred to an offshore account by someone who had meticulously planned every aspect of this fraud, and I was legally responsible for repaying every penny. Back in Denver, I had 48 hours to figure out my next move before Mountain Vista Commercial Banking would start expecting their first payment. $8 million at 7.5% interest meant I owed roughly $50,000 per month, more than I made in an entire year. I'd already contacted the FBI's Financial Crimes Division, but Agent Rebecca Torres warned me that recovering funds from offshore accounts could take years, if it was possible at all. The Cayman Islands weren't exactly known for their cooperation with American fraud investigations. Your best bet is to work with the bank, Agent Torres advised during our phone call. If you can demonstrate that you're a victim of identity theft and had no knowledge of the loan application, they might be willing to negotiate. But the evidence wasn't entirely in my favor. My signature was on dozens of documents, my personal information had been used throughout the application, and I was listed as the owner of Garcia Holdings LLC in official Nevada state records. From the bank's perspective, I looked like someone trying to escape responsibility for a legitimate business loan. I needed a different strategy. That evening, I called my college roommate Jessica Chen, who'd become a corporate attorney in Chicago. Jessica had always been the smartest person I knew, the kind of person who could spot legal loopholes that everyone else missed. "Daisy, this is a mess," Jessica said after I explained the situation, "but there might be an angle we haven't considered. If this Vincent character used your identity to create a business entity, and if he forged your signature on the incorporation documents, then Garcia Holdings LLC might not be legally valid." She explained that if the business formation was based on fraudulent documentation, then any contracts or agreements signed by that business could potentially be voided. The loan agreement was between Mountain Vista Bank and Garcia Holdings LLC, not between the bank and me personally. "But I'm listed as the personal guarantor," I pointed out. "Right, but if Garcia Holdings doesn't legally exist because it was formed through fraud, then the guarantor provision might not be enforceable. It's a long shot, but it's worth exploring." Jessica agreed to research the legal precedents while I gathered more evidence about the fraudulent business formation. I spent the next morning at the Colorado Secretary of State's office, pulling records for any other businesses that might have been registered using my information. What I found was disturbing. Over the past 6 months, 3 different companies had been registered in Colorado using variations of my name and signature. Garcia Holdings LLC was just the most recent. There was also Garcia Investment Group, registered 2 months ago, and Garcia Property Management, registered 4 months ago. None of these businesses had any actual operations, but they all listed impressive asset portfolios and business projections. Someone, presumably Vincent or his associates, had been building an entire network of phantom companies using my identity. I contacted the banks associated with the other 2 companies. Garcia Investment Group had been approved for a $2 million line of credit that hadn't been accessed yet. Garcia Property Management had received a $1.2 million equipment loan that had been fully withdrawn 3 weeks ago. The scope of the fraud was staggering. Vincent hadn't just targeted me for one $8 million con. I was part of an ongoing operation that had potentially stolen over $11 million using my identity alone. But this discovery also gave me leverage. The pattern of fraudulent business registrations and multiple loans strongly supported my claim that I was a victim rather than a willing participant. No legitimate business owner would register 3 separate companies with such similar names and purposes. I called Patricia at Mountain Vista Bank with this new information. "Miss Garcia, what you're describing sounds like organized financial fraud," Patricia said. "I need to escalate this to our Special Investigations Unit immediately."
Within hours, I received a call from David Kim, Mountain Vista's senior fraud investigator. David had 15 years of experience dealing with commercial loan fraud and money laundering schemes. "The pattern you've identified is consistent with what we call identity farming," David explained. "Criminal organizations identify individuals with excellent credit and clean financial histories, then systematically exploit their identities to create multiple business entities." David told me that Mountain Vista had been tracking an increase in suspicious loan applications over the past year, many involving recently formed Nevada and Wyoming business entities with impressive but unverifiable asset claims. We've been working with federal investigators to identify the source of these fraudulent applications, David said. Your case might be the break we've been looking for. The bank agreed to place a temporary hold on loan payments while their investigation proceeded, but David warned me that this protection was limited. If they couldn't prove fraud conclusively within 60 days, I would still be responsible for the debt. Meanwhile, Jessica had found something interesting in Nevada's business registration records. Garcia Holdings LLC had been registered using an IP address that traced back to a commercial internet cafe in Las Vegas. The same IP address had been used to register 43 other business entities over the past year, all with similar characteristics: impressive asset claims, out-of-state owners, and applications for large commercial loans. This is definitely a professional operation, Jessica told me. They're using public internet access points to avoid being traced, and they're registering businesses in Nevada because of the state's minimal disclosure requirements. The investigation was gaining momentum, but Vincent Rothschild remained a ghost. Even his name was probably fake. The FBI had run the signature from Marcus's business cards through their database and found no matches. The phone numbers he'd provided all traced to prepaid cell phones purchased with cash. Then, Marcus called with news that changed everything. "Daisy, I found Sarah's jewelry box hidden in the garage, the one with her grandmother's ring, the diamond earrings I gave her for our anniversary. It's all gone." Sarah had left her jewelry behind when she took the kids to her mother's house, not wanting to risk losing family heirlooms during what she assumed would be a temporary separation. The jewelry was worth approximately $30,000, not a fortune, but significant for a struggling family. "Marcus, did you tell Vincent about Sarah's jewelry?" "I might have mentioned it when he was asking about personal assets that could be used as additional loan collateral, but I never gave him access to our house." I felt a chill. "Marcus, change your locks immediately. This guy has been inside your home." This revelation meant Vincent's operation was more sophisticated and dangerous than we'd realized. He wasn't just stealing financial information, he was conducting physical surveillance and theft. This was organized crime, not just white-collar fraud. I reported the jewelry theft to both the FBI and the Phoenix police. Agent Torres was particularly interested in this development because it suggested Vincent had local accomplices who could conduct surveillance and break-ins. Professional fraud rings often include people with different specialties, Agent Torres explained. You have the financial experts who handle the paperwork, the social engineers who manipulate victims, and the physical operators who handle surveillance and theft. The FBI began coordinating with Nevada State Police and Las Vegas Metro to investigate the internet cafe and other businesses registered from that location. They also started surveillance on the building where Vincent had operated his phantom office, in case he or his associates returned. But while law enforcement pursued their investigation, I still faced an immediate problem. Even if Vincent was eventually caught, the $8 million might never be recovered. The loan was real, the bank had real money they expected to be repaid, and I was the person legally responsible for that debt. I needed to take control of the situation before it destroyed my life completely. That's when I remembered something David Kim had mentioned during our conversation. Mountain Vista Bank had been tracking suspicious loan patterns, but they were also losing money to fraud. They had as much incentive as I did to find a solution that didn't involve years of litigation and potentially unrecoverable losses. I called David and proposed a meeting to discuss alternatives to traditional debt collection. "What kind of alternatives?" David asked. "I want to make you an offer that might be more valuable to the bank than trying to collect $8 million from someone who doesn't have it." David agreed to meet the following morning. I spent the evening preparing what might be the most important presentation of my life, one that could either save me from financial ruin or make my situation dramatically worse. I arrived at Mountain Vista Bank's Denver branch 30 minutes early, carrying a folder thick with documentation and a laptop loaded with research that had kept me awake until 3 a.m. David Kim met me in a small conference room that smelled like coffee and anxiety. "Before we start," David said,
I should tell you that our legal department has reviewed your case. While they acknowledge the suspicious circumstances, they're not convinced that the bank should absorb an $8 million loss based on your claims of identity theft. I'd expected this. Banks don't survive by writing off massive loans based on compelling stories. David, I'm not here to ask you to forgive the debt, I said, opening my laptop. I'm here to offer you something more valuable than $8 million in loan payments. I'd spent hours researching Mountain Vista Bank's business model, their lending practices, and their recent financial reports. They were a regional bank that specialized in commercial real estate and business development loans. Over the past 2 years, they'd written off over $12 million in fraudulent loans, money they'd never recover. What I'm offering is intelligence, I continued, complete documentation of a fraud operation that's stolen at least $11 million using my identity alone, and probably tens of millions more using other victims. David leaned forward, interested but skeptical. I showed him the evidence Jessica and I had compiled. The 43 businesses registered from the same Las Vegas IP address, the pattern of phantom companies with identical financial structures, the timeline showing how Vincent's operation had evolved from small equipment loans to massive commercial real estate financing. We've identified at least 6 other victims whose identities were used to create fraudulent business entities, I said, 2 in Colorado, 3 in Arizona, 1 in Utah. The total value of fraudulent loans we can document is approaching $30 million.
David's expression changed as he realized what I was proposing. "You want to turn this into a federal racketeering case," he said. "Exactly. And I want Mountain Vista Bank to be the lead financial institution cooperating with federal investigators. Instead of pursuing one $8 million debt from someone who can't pay it, you become the bank that helped law enforcement shut down a multi-state fraud ring." I explained the benefits of this approach. If the FBI could build a racketeering case, they could use asset forfeiture laws to seize any property or accounts connected to the fraud operation. Banks that cooperated with federal investigations often recovered significantly more money than they would through traditional debt collection. There's also the public relations angle, I added. Mountain Vista becomes the bank that protects customers from fraud, not the bank that pursues innocent victims for debts they didn't create. David was quiet for several minutes, studying the documentation I'd provided. "This is interesting, Daisy, but you're asking me to convince my board of directors to gamble $8 million on the possibility that federal investigators can recover stolen funds from a criminal organization." "I'm asking you to make a strategic business decision," I replied. "You can spend the next 5 years trying to collect a debt from someone who doesn't have the money, destroying my life in the process, and getting nothing in return. Or you can partner with federal investigators to shut down a fraud ring that's stealing millions from banks across the western United States." David made some calls. Within an hour, I was sitting across from 3 bank executives and their chief legal counsel. They wanted to hear my proposal directly. The chief counsel, a sharp woman named Margaret Foster, cut straight to the core issue. "Ms. Garcia, what guarantees can you provide that this cooperation will result in recovery of our funds?" "None," I said honestly, "but I can guarantee that pursuing traditional debt collection will result in 0 recovery, years of legal expenses, and negative publicity when the media inevitably picks up the story of a bank destroying an innocent fraud victim." I'd done my homework on Mountain Vista's recent court cases. They'd spent over $2 million in legal fees over the past 3 years pursuing bad debts, with a recovery rate of less than 15%. "The FBI has already expressed interest in building a comprehensive case," I continued. "Agent Torres told me yesterday that they're prepared to prioritize this investigation if they have a financial institution willing to cooperate fully." Margaret Foster exchanged glances with the other executives. "What exactly would this cooperation involve?" she asked. I outlined the proposal Jessica and I had developed. Mountain Vista would formally report the fraud to federal authorities and provide complete documentation of the loan application process. They would work with FBI forensic accountants to trace the money trail and identify other potential victims. In exchange, they would have priority status in any asset recovery proceedings.
The key advantage, I explained, is that you're not just pursuing recovery of your own funds, you're participating in a federal investigation that could recover stolen assets from dozens of fraudulent transactions. The meeting lasted 2 hours. The executives asked detailed questions about the evidence I'd gathered, the FBI's investigation timeline, and the potential legal implications of my proposal. Finally, Margaret Foster asked the question I'd been dreading. Miss Garcia, if we agree to this approach and the federal investigation fails to recover any funds, are you prepared to resume personal responsibility for the debt? I'd thought about this extensively. I'm prepared to negotiate a reasonable repayment based on my actual financial capacity, I said, but I won't accept responsibility for a debt that was created through identity theft. David Kim spoke up. Margaret, we should also consider the precedent this case could set. If we successfully prosecute this fraud ring, it could deter other criminal organizations from targeting regional banks. The executives asked me to wait in the lobby while they deliberated. I sat in an uncomfortable chair for 45 minutes, watching other customers conduct normal banking business while my financial future hung in the balance. When they called me back, Margaret Foster delivered their decision. Mountain Vista Bank is prepared to suspend collection activities on your loan for 6 months while we cooperate with federal investigators. If the investigation results in recovery of at least 50% of the stolen funds, we'll consider the debt resolved. If recovery is less than 50%, we'll negotiate a repayment plan based on the amount recovered and your demonstrated good faith efforts to assist the investigation. It wasn't complete forgiveness, but it was a path forward that didn't involve immediate financial ruin. There's one additional condition, Margaret added. You'll need to sign an agreement to cooperate fully with both our internal investigation and the federal inquiry. This includes access to all your personal and financial records, submitting to interviews, and potentially testifying in court proceedings. I agreed immediately. Complete transparency was a small price to pay for a chance to reclaim my life. David Kim shook my hand as we left the conference room. Daisy, I have to admit, when you first called about this loan, I assumed we were dealing with someone trying to avoid their financial obligations. Your approach today was impressive.
That afternoon, I called Agent Torres to report Mountain Vista Bank's agreement to cooperate. She was pleased, but warned me that federal fraud investigations moved slowly. Building a solid racketeering case takes time, she explained. We need to identify all the victims, trace all the money movements, and gather enough evidence to ensure convictions. This could take 18 months or longer. 18 months of uncertainty, but also 18 months of hope. I also called Jessica to thank her for the legal research that had made this solution possible. Daisy, you just convinced a bank to gamble $8 million on your ability to help solve a federal crime, Jessica said. That takes either incredible courage or complete desperation. Probably both, I admitted. That evening, Marcus called to check on my meeting with the bank. When I explained the agreement I'd negotiated, he was quiet for a long time. I can't believe you got them to agree to that, he finally said. After everything I've put you through, you found a way to turn this disaster into an opportunity. Marcus, we're not out of this yet. The investigation has to succeed, and Vincent has to be caught. Until that happens, I'm still potentially responsible for $8 million. But for the first time since that email notification had appeared on my phone, I felt like I had some control over my situation. I wasn't just a victim anymore. I was a partner in bringing down the people who had tried to destroy my life. 3 weeks after my agreement with Mountain Vista Bank, Agent Torres called with the first major breakthrough in the federal investigation. "We found Vincent Rothschild," she said. Or rather, we found the man who's been using that identity. His real name is Carl Stevens, and he's currently in federal custody in Las Vegas on unrelated charges. Carl Stevens had been arrested during a raid on an illegal gambling operation, but when FBI agents ran his fingerprints, they discovered he was wanted in connection with multiple fraud investigations across 7 states. The Vincent Rothschild identity was just one of at least 12 aliases he'd used over the past 5 years. Stevens has been running sophisticated financial fraud operations since 2019, Agent Torres explained. He specializes in targeting small business owners who are facing bankruptcy or foreclosure. He gains their trust, extracts personal information about their family members, then exploits those family members' identities for large-scale loan fraud.
The FBI had recovered Stephen's laptop and several external hard drives containing detailed records of his operations. What they found was both shocking and oddly reassuring. I wasn't his first victim, and Marcus wasn't his mark. Stevens had maintained meticulous records of over 200 potential targets, complete with credit reports, family trees, and psychological profiles. He'd researched their financial vulnerabilities, personal relationships, and even their social media activity to identify the most effective manipulation strategies. Your brother fit Stevens' target profile perfectly, Agent Torres said. Struggling business owner, strong family relationships, pride issues that would prevent him from asking for help through legitimate channels. Stevens probably spent weeks studying Marcus before making contact. The hard drives also contained templates for business formation documents, forged signatures, and detailed instructions for creating convincing phantom offices. Stevens had operated similar fake consulting businesses in Phoenix, Denver, Salt Lake City, and Albuquerque, always targeting the same type of victim and using the same basic methodology. But the most important discovery was Stevens' financial records. The FBI had identified bank accounts in 7 countries containing over $40 million in stolen funds. The money had been systematically moved through a network of shell companies and cryptocurrency exchanges, but digital forensics experts were confident they could trace most of it. The good news is that Stevens kept detailed records of where the money went, Agent Torres said. The bad news is that recovering funds from international accounts is complicated and time-consuming. She explained that the FBI was working with financial intelligence units in the Cayman Islands, Switzerland, and Hong Kong to freeze the accounts Stevens had used. They were also coordinating with Interpol to identify and arrest Stevens' international associates. We estimate that Stevens' organization has stolen over $60 million during the past 5 years. Your case was one of the largest single transactions they've attempted. This information was encouraging, but I still faced the practical problem of waiting for the recovery process while maintaining my own financial stability. My agreement with Mountain Vista Bank provided temporary relief, but I couldn't put my life on hold indefinitely. I'd been in touch with the other victims the FBI had identified. There was Jennifer Walsh, a veterinarian in Salt Lake City, whose identity had been used to secure a $4 million loan for a phantom medical equipment company. Kevin Rodriguez, a contractor in Albuquerque, had been victimized for $2.8 million through a fake construction business. Angela Thompson in Phoenix had lost $3.2 million to a fraudulent restaurant chain. We'd formed an informal support group, sharing information and coordinating our cooperation with federal investigators. Jennifer had the most experience with financial fraud recovery, having worked for 3 years as a forensic accountant before becoming a veterinarian. The key thing to understand, Jennifer explained during one of our conference calls, is that asset recovery in international fraud cases typically takes 2 to 5 years. Even when law enforcement successfully freezes the accounts, actually getting the money back involves complex legal proceedings in multiple jurisdictions. This timeline was problematic for all of us, but especially for Kevin, whose construction business was failing while he dealt with the investigation. Angela had already lost her house to foreclosure because the bank holding her fraudulent loan had refused to negotiate. We decided to explore legal options beyond the federal investigation. Jennifer suggested we contact a law firm that specialized in class action suits against financial institutions that had failed to properly verify loan applications. The law firm, Morrison & Associates, was interested in our case. Senior partner David Morrison explained that banks had legal obligations to verify the legitimacy of loan applications, especially for large commercial loans. Mountain Vista Bank and the other institutions involved processed these loan applications without conducting proper due diligence. If they had verified the business addresses, contacted the supposed business partners, or conducted basic background checks on the companies involved, they would have discovered the fraud before dispersing the funds.
Morrison believed we had grounds for a lawsuit, arguing that the banks should bear responsibility for their failure to detect obvious fraud indicators. This approach could provide an alternative path to financial recovery if the federal investigation didn't succeed. However, pursuing litigation against the banks was risky. If we lost, we could be responsible for their legal fees in addition to the original loan amounts. And if we won, the banks might become less cooperative with the federal investigation. I discussed this dilemma with David Kim at Mountain Vista Bank. He was surprisingly understanding. "Daisy, I appreciate that you're exploring all your options," David said.
From the bank's perspective, we're more interested in recovering our funds than in avoiding responsibility for our lending practices. If a class action suit results in faster recovery for everyone involved, we might actually support it. This response was unexpected but made sense from a business standpoint. Mountain Vista Bank was facing millions in losses from Stevens' fraud ring. If litigation could recover those funds more quickly than the federal investigation, it served their interests as well as ours. Morrison and Associates agreed to represent our group on a contingency basis, meaning they would only be paid if we recovered funds through the lawsuit. They estimated that preparing the case would take 6 to 8 months, with trial proceedings potentially lasting another year. Meanwhile, the federal investigation was accelerating. Stevens had agreed to cooperate with prosecutors in exchange for a reduced sentence, providing detailed information about his associates and the locations of hidden assets. Agent Torres called with updates every few weeks. Stevens' cooperation had led to arrests in Las Vegas, Phoenix, and Denver. The FBI had seized luxury cars, real estate, and jewelry purchased with stolen funds. They'd also identified victims dating back to 2018, expanding the scope of the investigation considerably. Stevens was more organized than most white-collar criminals, Agent Torres explained. He maintained detailed spreadsheets tracking every dollar he stole and every asset he purchased. This documentation is making recovery efforts much more straightforward than usual. The investigation had also revealed how Stevens had obtained access to my personal information. Marcus had provided basic details during their initial meetings, but Stevens had used those details to hack into databases maintained by credit reporting agencies and financial institutions. Stevens had inside contacts at 3 major credit bureaus, Agent Torres said. He was purchasing complete credit reports and personal financial information for hundreds of dollars per person. This gave him everything he needed to create convincing loan applications. This discovery led to a separate investigation of the credit bureau employees who had been selling personal information. The data breach affected thousands of people beyond Stevens' direct victims. By the end of my 5th month working with federal investigators, the case had expanded into one of the largest financial fraud prosecutions in recent years. Stevens and 14 associates were facing racketeering charges that could result in decades of prison time. But despite all this progress, I still hadn't seen a dollar in recovered funds. The frozen accounts contained millions of dollars, but actually transferring that money back to victims required court orders, international legal agreements, and bureaucratic processes that moved at glacial speed. My 6-month agreement with Mountain Vista Bank was approaching its expiration date, and I needed to prepare for the possibility that the federal investigation wouldn't meet their recovery timeline. That's when Agent Torres called with news that would change everything. Daisy, we found something Stevens probably didn't want us to find. Hidden in his laptop files was documentation for a domestic bank account containing $8.7 million in cash. The account is in Nevada, which means we can freeze it immediately without international legal complications. The account had been established using another fake identity, but Stevens' detailed records proved it contained funds directly traced to the loans taken out using my identity and the identities of other victims in our group. We're moving to seize those funds this week, Agent Torres said. If everything goes smoothly, you could see recovery payments within 30 days. For the first time in 6 months, I allowed myself to feel optimistic. The nightmare that had started with an unexpected email might finally be approaching an end. The Nevada account seizure didn't go as smoothly as Agent Torres had predicted. Stevens' organization had built multiple layers of legal protection around their domestic assets, using shell companies and trust structures that required individual court orders to penetrate. 2 weeks before my agreement with Mountain Vista Bank was set to expire, I received a call that made my heart sink. Daisy, we've hit a legal snag, Agent Torres said. Stevens' lawyers have challenged the asset seizure, claiming the Nevada account contains legitimate business funds unrelated to the fraud investigation. The challenge would delay asset recovery by at least 3 months, while federal prosecutors work through the court system. Stevens was cooperating with investigators, but his legal team was simultaneously protecting his interests by challenging every asset seizure and arguing that some of the frozen funds belonged to legitimate business activities. His lawyers are arguing that Stevens operated some legitimate consulting businesses alongside the fraudulent ones, Agent Torres explained. They're demanding that prosecutors prove which specific funds came from illegal activities versus legal business income. This legal maneuvering was frustrating, but not unexpected. White-collar criminals often mix legitimate and illegitimate activities to make asset recovery more complicated. I called David Kim to explain the delay. He was understanding but firm about the bank's position. Daisy, our board is willing to extend the cooperation agreement for another 90 days, but that's the absolute limit, David said. After that, we'll need to begin collection proceedings regardless of the federal investigation status. 90 days to resolve a complex international fraud case seemed impossible, but I didn't have any alternatives. The victim support group Jennifer had organized was facing similar pressures. Kevin Rodriguez's construction business had failed completely while he dealt with the investigation, and he was considering bankruptcy. Angela Thompson had moved in with her parents after losing her house and was working 2 part-time jobs to pay basic living expenses. Jennifer suggested we accelerate the class action lawsuit against the banks involved in the fraudulent loans. If we can get a preliminary settlement from the banks, it might provide enough financial relief to keep everyone afloat while the federal investigation continues, Jennifer said during one of our weekly calls. Morrison and Associates had been preparing our case for 4 months and were confident they could demonstrate that the banks had failed to exercise proper due diligence in processing the loan applications. Stephen's operation was sophisticated, but it wasn't perfect, David Morrison explained. There were red flags that proper verification procedures would have caught. He showed us examples of the red flags. Garcia Holdings LLC had been registered only weeks before applying for an $8 million loan, with no business history or verifiable revenue streams. The supporting financial documents contained subtle inconsistencies that professional underwriters should have noticed. Most importantly, none of the banks had attempted to verify the business addresses or conduct in-person meetings with the supposed business owners.
Industry standards require banks to verify the legitimacy of large commercial loan applicants, Morrison said. These banks essentially handed out millions of dollars based on paperwork without conducting basic verification procedures. Morrison was particularly critical of Mountain Vista Bank's lending practices. They had processed my loan application in less than a week without requesting additional documentation or conducting background checks on Garcia Holdings LLC. A legitimate $8 million commercial loan typically takes 30 to 60 days to process, with extensive verification procedures, Morrison explained. Mountain Vista approved this loan in 5 business days, which suggests they were prioritizing speed over security. The law firm was ready to file the class action suit, but they wanted our group to understand the risks. If we lost the case, we could be responsible for the bank's legal fees, potentially adding hundreds of thousands of dollars to our existing debt. However, Morrison added, if we win, the banks would be required to absorb the losses from the fraudulent loans and potentially pay additional damages for their negligent lending practices. After extensive discussion, our victim group decided to proceed with the lawsuit while continuing to cooperate with the federal investigation. We were essentially pursuing 2 parallel strategies for recovery. The lawsuit filing generated immediate media attention. Local news stations picked up the story of identity theft victims suing banks for negligent lending practices. The coverage was generally sympathetic to our situation, focusing on how we'd been victimized twice, first by the fraud ring, then by the financial institutions demanding repayment of debts we hadn't created. Mountain Vista Bank's response to the media coverage was measured but defensive. They issued a statement emphasizing their cooperation with federal investigators while maintaining that they were victims of sophisticated fraud rather than negligent lenders. David Kim called me the day after the news coverage aired. Daisy, I want you to know that the media attention doesn't change our willingness to work with you, he said. We understand why you're pursuing all available options for recovery. This response surprised me. I'd expected the bank to become less cooperative once we filed the lawsuit. The reality is that we're all victims of the same criminal organization, David continued. Our interests are aligned. We all want to recover the stolen funds and see Stephen's organization prosecuted successfully. 2 weeks after filing the lawsuit, Morrison and Associates received settlement offers from 3 of the 5 banks involved in our case. The offers weren't full forgiveness of the fraudulent debts, but they represented significant progress. Mountain Vista Bank offered to settle for 30% of the original loan amount, payable over 5 years at 0% interest.
For my $8 million loan, this would mean accepting responsibility for $2.4 million. Still a substantial debt, but manageable compared to the original amount. The other banks made similar offers, typically settling for 25 to 35% of the fraudulent loan amounts. These settlement offers suggest the banks recognize they have liability for their lending practices, Morrison explained. They're trying to minimize their losses while avoiding the uncertainty of a trial. Jennifer was inclined to accept her bank settlement offer, but Kevin and Angela wanted to proceed to trial, hoping for complete debt forgiveness. I was torn. Accepting Mountain Vista's settlement would mean taking on $2.4 million in debt for a crime I didn't commit. But rejecting the settlement meant risking a trial that could result in full liability for the original $8 million loan. While I considered the settlement offer, Agent Torres called with unexpected news about Stevens' cooperation with federal investigators. Stevens has provided information about a separate money laundering operation that his organization was working with, she said. The operation involves cryptocurrency exchanges and real estate investments that might contain additional recoverable assets. The FBI had discovered that Stevens' fraud ring was just one component of a larger criminal network that specialized in converting stolen funds into hard assets, like luxury real estate and precious metals. This network had been operating for over a decade and had processed hundreds of millions in criminal proceeds. If we can successfully prosecute the money laundering network, asset recovery could be much larger than we originally anticipated, Agent Torres explained. But investigating this network will add significant time to the overall case. The expanded investigation meant that federal asset recovery might take 2 to 3 years instead of the 18 months originally estimated. This timeline made the bank settlement offers more attractive, even though they involved accepting partial responsibility for debts I hadn't created. I discussed the dilemma with Jessica, who had been following the case closely. "Daisy, you've already achieved something remarkable," Jessica said. "You've turned a potential $8 million disaster into a manageable debt with realistic repayment terms. The settlement offer isn't perfect, but it gives you your life back." She was right. Accepting the settlement would mean monthly payments of approximately $4,000 for 5 years, challenging but possible with my income from the consulting firm. Rejecting the settlement meant potentially facing the full debt if the trial went badly. But before making a final decision, I wanted to have one more conversation. I called Stevens' lawyer and requested a meeting. "I want to hear directly from your client about how he targeted my family and what he did with the money he stole," I told the lawyer. "If he's truly cooperating with federal investigators, he should be willing to provide that information to his victims." The lawyer agreed to arrange a meeting at the federal detention facility where Stevens was being held. Meeting the man who had nearly destroyed my life felt like something I needed to do before deciding how to move forward with the settlement negotiations. The federal detention facility in Las Vegas was nothing like what I'd expected. Instead of the dramatic prison setting from movies, it looked more like a sterile office building with excessive security measures. I sat in a small interview room with fluorescent lighting and institutional furniture, waiting to meet the man who had systematically destroyed my financial life. Carl Stevens entered the room accompanied by his lawyer and a federal marshal. He was smaller than I'd imagined, maybe 5'8", thin-build, wearing an orange jumpsuit that seemed too large for his frame. He had the kind of unremarkable appearance that would make him forgettable in a crowd, which probably helped him operate his fraud schemes. "Miss Garcia," Stevens said, sitting across from me, "I want you to know that I never intended for things to go as far as they did with your case." This opening surprised me. I'd expected either defiance or complete silence. "What did you ask?" Stevens looked at his lawyer, who nodded permission to continue. "The original plan was to borrow against your credit for about 6 months, just long enough to generate some operating capital for legitimate business ventures," Stevens said. "I had deals in place to purchase distressed restaurant properties in Phoenix. The plan was to flip them quickly and repay the loans before anyone realized what had happened." Industry standards require banks to verify the legitimacy of large commercial loan applicants, Morrison said. These banks essentially handed out millions of dollars based on paperwork without conducting basic verification procedures. Morrison was particularly critical of Mountain Vista Bank's lending practices. They had processed my loan application in less than a week without requesting additional documentation or conducting background checks on Garcia Holdings LLC. A legitimate $8 million commercial loan typically takes 30 to 60 days to process, with extensive verification procedures, Morrison explained. Mountain Vista approved this loan in 5 business days, which suggests they were prioritizing speed over security. The law firm was ready to file the class action suit, but they wanted our group to understand the risks. If we lost the case, we could be responsible for the bank's legal fees, potentially adding hundreds of thousands of dollars to our existing debt. However, Morrison added, if we win, the banks would be required to absorb the losses from the fraudulent loans and potentially pay additional damages for their negligent lending practices. After extensive discussion, our victim group decided to proceed with the lawsuit while continuing to cooperate with the federal investigation. We were essentially pursuing 2 parallel strategies for recovery. The lawsuit filing generated immediate media attention. Local news stations picked up the story of identity theft victims suing banks for negligent lending practices. The coverage was generally sympathetic to our situation, focusing on how we'd been victimized twice, first by the fraud ring, then by the financial institutions demanding repayment of debts we hadn't created. Mountain Vista Bank's response to the media coverage was measured but defensive. They issued a statement emphasizing their cooperation with federal investigators while maintaining that they were victims of sophisticated fraud rather than negligent lenders. David Kim called me the day after the news coverage aired. "Daisy, I want you to know that the media attention doesn't change our willingness to work with you," he said. "We understand why you're pursuing all available options for recovery." This response surprised me. I'd expected the bank to become less cooperative once we filed the lawsuit. "The reality is that we're all victims of the same criminal organization," David continued. "Our interests are aligned. We all want to recover the stolen funds and see Stephen's organization prosecuted successfully." 2 weeks after filing the lawsuit, Morrison & Associates received settlement offers from 3 of the 5 banks involved in our case. The offers weren't full forgiveness of the fraudulent debts, but they represented significant progress. Mountain Vista Bank offered to settle for 30% of the original loan amount, payable over 5 years at 0% interest. For my $8 million loan, this would mean accepting responsibility for $2.4 million, still a substantial debt, but manageable compared to the original amount. The other banks made similar offers, typically settling for 25 to 35% of the fraudulent loan amounts. These settlement offers suggest the banks recognize they have liability for their lending practices, Morrison explained. They're trying to minimize their losses while avoiding the uncertainty of a trial. Jennifer was inclined to accept her bank settlement offer, but Kevin and Angela wanted to proceed to trial, hoping for complete debt forgiveness. I was torn. Accepting Mountain Vista settlement would mean taking on $2.4 million in debt for a crime I didn't commit. But rejecting the settlement meant risking a trial that could result in full liability for the original $8 million loan. While I considered the settlement offer, Agent Torres called with unexpected news about Stephen's cooperation with federal investigators. "Stevens has provided information about a separate money laundering operation that his organization was working with," she said. "The operation involves cryptocurrency exchanges and real estate investments that might contain additional recoverable assets." The FBI had discovered that Stephen's fraud ring was just one component of a larger criminal network that specialized in converting stolen funds into hard assets, like luxury real estate and precious metals. This network had been operating for over a decade and had processed hundreds of millions in criminal proceeds. "If we can successfully prosecute the money laundering network, asset recovery could be much larger than we originally anticipated," Agent Torres explained. "But investigating this network will add significant time to the overall case." The expanded investigation meant that federal asset recovery might take 2 to 3 years instead of the 18 months originally estimated. This timeline made the bank settlement offers more attractive, even though they involved accepting partial responsibility for debts I hadn't created. I discussed the dilemma with Jessica, who had been following the case closely. "Daisy, you've already achieved something remarkable," Jessica said. "You've turned a potential $8 million disaster into a manageable debt with realistic repayment terms. The settlement offer isn't perfect, but it gives you your life back." She was right. Accepting the settlement would mean monthly payments of approximately $4,000 for 5 years, challenging but possible with my income from the consulting firm. Rejecting the settlement meant potentially facing the full debt if the trial went badly. But before making a final decision, I wanted to have one more conversation. I called Stephen's lawyer and requested a meeting. I want to hear directly from your client about how he targeted my family and what he did with the money he stole, I told the lawyer. If he's truly cooperating with federal investigators, he should be willing to provide that information to his victims. The lawyer agreed to arrange a meeting at the federal detention facility where Stevens was being held. Meeting the man who had nearly destroyed my life felt like something I needed to do before deciding how to move forward with the settlement negotiations. The federal detention facility in Las Vegas was nothing like what I'd expected. Instead of the dramatic prison setting from movies, it looked more like a sterile office building with excessive security measures. I sat in a small interview room with fluorescent lighting and institutional furniture, waiting to meet the man who had systematically destroyed my financial life. Carl Stevens entered the room accompanied by his lawyer and a federal marshal. He was smaller than I'd imagined, maybe 5'8", thin-built, wearing an orange jumpsuit that seemed too large for his frame. He had the kind of unremarkable appearance that would make him forgettable in a crowd, which probably helped him operate his fraud schemes. "Miss Garcia," Stevens said, sitting across from me, "I want you to know that I never intended for things to go as far as they did with your case." This opening surprised me. I'd expected either defiance or complete silence. "What did you ask?" Stevens looked at his lawyer, who nodded permission to continue. "The original plan was to borrow against your credit for about 6 months, just long enough to generate some operating capital for legitimate business ventures," Stevens said. "I had deals in place to purchase distressed restaurant properties in Phoenix. The plan was to flip them quickly and repay the loans before anyone realized what had happened."
I stared at him. You're telling me this was supposed to be a temporary loan that I would never have known about? That's right. Your brother would have benefited because I would have hired his restaurant as a management consultant for the properties we acquired. You would have benefited because your credit would have been enhanced by a large loan with perfect payment history. Everyone would have won. The casual way he described identity theft as a business strategy was infuriating, but I forced myself to stay calm. "What went wrong with your plan?" I asked. Stevens explained that his operation had been infiltrated by a competing fraud ring that specialized in stealing assets from other criminals. When Stevens' organization moved the $8 million to what they thought was a secure offshore account, it was actually controlled by rivals who immediately transferred the funds to accounts Stevens couldn't access. "We were victims of fraud ourselves," Stevens said, apparently without irony. "The people who stole our money are still operating, as far as I know." His lawyer interjected. "Mr. Stevens has provided federal investigators with detailed information about this rival organization. His cooperation has been instrumental in identifying their methods and potential targets." I asked Stevens about the other victims, Jennifer, Kevin, Angela, and the dozens of people whose identities he'd exploited over the years. "I want you to understand that I researched every person whose identity I used," Stevens said. "I only targeted people who could afford the temporary impact on their credit, and I always intended to ensure they benefited from the arrangements." This justification was absurd, but Stevens seemed to genuinely believe it. How exactly would Angela Thompson have benefited from losing her house to foreclosure? I asked. Stevens looked uncomfortable. Some of the later cases got more complicated than I anticipated. The rival organization's interference created problems I hadn't planned for. After an hour of conversation, I realized that Stevens was a peculiar type of criminal, someone who had convinced himself that his elaborate fraud schemes were sophisticated business strategies rather than theft. He had detailed plans for how his victims would ultimately benefit, even though those plans were built on foundations of identity theft and financial fraud. But the conversation also provided useful information. Stevens confirmed that federal investigators had successfully traced most of the stolen funds, and that asset recovery was primarily delayed by international legal procedures rather than missing money. "The funds exist," Stevens said. "They're just tied up in legal proceedings that could take another year or two to resolve."
His lawyer added that Stevens was prepared to testify against the rival fraud organization and provide detailed documentation of their money laundering methods. This cooperation could accelerate the federal investigation and potentially lead to faster asset recovery. After leaving the detention facility, I called Jessica to discuss what I'd learned. Daisy, it sounds like Stevens is a sociopath who's convinced himself he's a legitimate businessman, Jessica said. But the important thing is that his information might help speed up the recovery process. However, I still faced the immediate decision about Mountain Vista Bank's settlement offer. My extended deadline was approaching. I needed to choose between accepting the $2.4 million settlement or risking a trial that could result in full liability. I called David Kim to discuss the bank's position. David, based on my conversation with Stevens, it sounds like federal asset recovery is more likely than we originally thought. Would Mountain Vista consider modifying the settlement terms if I can provide additional evidence about recoverable funds? David was interested. What kind of modification are you thinking about? I proposed a structured settlement that would adjust based on federal recovery results. If the FBI recovered more than 50% of the stolen funds within 2 years, I would pay only 15% of the original loan amount. If recovery was between 25 and 50%, I would pay 25%. If recovery was less than 25%, I would accept the current settlement terms. This approach aligns our interests, I explained. The bank benefits from my continued cooperation with federal investigators, and I'm protected if the investigation succeeds. David said he would present the proposal to Mountain Vista's board of directors. While waiting for the bank's response, I received a call from Morrison & Associates with news about the class action lawsuit. 2 more banks have agreed to settle, David Morrison said, and the banks that initially offered settlements are willing to improve their terms because they're concerned about the trial evidence we've developed. Mountain Vista Bank was now offering a modified settlement, 20% of the original loan amount if I withdrew from the class action suit, or standard litigation risk if I proceeded to trial. This created a complex decision matrix. I could accept the class action settlement and be responsible for $1.6 million. I could pursue my proposed structured settlement based on federal recovery results, or I could pursue to trial and risk full liability if we lost. Agent Torres called with an update that influenced my decision. Daisy, Stevens' information about the rival fraud organization has led to arrests in 3 countries, she said. We've also located additional domestic accounts containing funds that can be seized without international legal complications. The FBI had identified $12.3 million in domestic accounts directly linked to Stevens' victims. The seizure process for these accounts would take weeks rather than years. We're confident that victims in Stevens' case will see significant recovery within the next 6 months, Agent Torres said. This information changed my calculation. If federal recovery was likely within 6 months, the structured settlement with Mountain Vista Bank became much more attractive than the immediate class action settlement. I called David Kim to finalize the structured settlement agreement. Mountain Vista's board had approved the proposal with minor modifications. If federal recovery exceeds 60% within 18 months, you'll pay 10% of the original loan amount, David said. If recovery is between 40 to 60%, you'll pay 20%. Below 40% recovery, you'll pay the standard settlement amount of 30%. I accepted the agreement. 4 months later, Agent Torres called with the news I'd been hoping for. Daisy, the FBI has recovered $8.2 million of the $8.7 million stolen using your identity. Recovery payments will be processed within 30 days. The federal investigation had successfully traced and seized assets from both Stevens' organization and the rival fraud ring that had stolen from them. International cooperation had been faster than expected, and Stevens' detailed records had made asset identification straightforward. My final payment to Mountain Vista Bank was $800,000, 10% of the original fraudulent loan. The bank recovered their funds through federal asset seizure, and I was left with a manageable debt that I could pay off over 3 years.
Marcus's restaurant had closed during the investigation, but he'd found work as a general manager for a restaurant chain in Phoenix. Sarah and the kids had moved back home once the criminal charges against Marcus were dropped. "I'm sorry I ever got you involved in this," Marcus said during a call after the settlement was finalized.
Marcus, we both learned something important, I replied. When someone offers you a solution that seems too good to be true, it probably is. The experience had changed how I thought about financial security and family relationships. I'd learned that I was capable of handling much more stress and complexity than I'd ever imagined, but I'd also learned to be more skeptical of people who promised easy solutions to difficult problems. Stevens was sentenced to 15 years in federal prison for racketeering and money laundering. His cooperation with investigators resulted in a reduced sentence, but he would still spend most of his remaining productive years behind bars. The class action lawsuit against the banks resulted in changes to commercial lending practices, with new requirements for verification procedures on large loans. Jennifer, Kevin, Angela, and the other victims in our support group all achieved settlements or recoveries that allowed them to rebuild their financial lives. A year after this ordeal began, I was promoted to senior marketing director at my consulting firm. My credit had been restored through the federal investigation, and I'd learned skills in financial analysis and legal research that made me more valuable professionally. The most important lesson was simpler. When someone steals your identity and threatens to destroy your financial life, you don't have to accept the role of helpless victim. Sometimes the best response is to become a partner in solving the problem rather than just someone who suffers from it. And sometimes, 3 little words to the right person at the right time can change everything. In my case, those words were, "Let's work together." Looking for more? We've got 2 amazing stories ready for you right on screen. If this one touched you, these are absolutely worth your time. Click to watch them now. And hey, subscribe and hit that bell to never miss our latest uploads.